Hi, thanks for watching. In this video, I'm going to discuss something that's existed and evolved in the Canadian mortgage industry for years: cashback mortgages. Now, the term cashback is a bit misleading. First of all, you can only receive cashback from something you've actually spent money on, like if you were to purchase something for $100 and get $5 back. In the case of a mortgage, you're actually borrowing, not spending, so the cashback is more like a cash advance because you'll end up paying back the money by the end of the term. Some lenders provide cashbacks in set dollar amounts. Quite often, a lender will provide a cashback, which is a specific amount meant to cover the cost of legal and setup fees. This is normally provided as a temporary promotion to increase the lender's volume of business. Some lenders provide cashbacks based on a percentage of the mortgage amount. So the question is, how does the lender make back the amount of the cashback that was provided to the borrower at closing? Well, the simple answer is interest cost. You see, even though some lenders advertise posted rates, which are quite high, every lender basically has base rates, which are sometimes referred to as discounted rates, and these are essentially the lowest rates which the lender is willing to provide. Most non-bank lenders simply advertise these base rates and don't have posted rates at all. So let me show you an example of a cashback as a percentage of the mortgage amount and compare the cost of a cashback mortgage versus a non-cashback mortgage. Let's say, for example, that the lender currently offers a 5-year fixed base rate of 3%, but also offers a 5-year fixed rate of 3.75% with a cashback of 3% of the mortgage amount. Although the rates in this example may not be current, the differential of 0.75% between the two rates is the current differential offered by one of our lenders in regards to their 3% cashback mortgage versus their non-cashback mortgage, so it provides a real-world comparison. For the purpose of this example, we'll make the mortgage amount $500,000, so the cashback in this case would be $15,000 since 3% of $500,000 equals $15,000. Now, please feel free to pause the video if you'd like to look at this chart more carefully, but basically it compares the two options. We can see that the total interest paid on the cashback mortgage is $87,121, but $69,347 has been paid with the non-cashback mortgage. If we subtract the interest paid on the non-cashback from the interest paid on the cashback, we get a total difference of $17,774. Then, when we subtract the amount of the cashback from the difference in interest costs, we get a difference of $2,774. So the cashback will cost slightly more than the non-cashback mortgage. Now, the reason that the lenders would charge more interest during the 5 years than the amount of the cashback would have something to do with inflation and the time value of money, as well as some other factors. So, if the cashback ends up being the best, most suitable product, is there anything else that the borrower should be aware of other than the additional cost? The cashback mortgage, if the borrower pays it to the maturity date, functions like a non-cashback mortgage. However, if they choose to break the mortgage during the term, they will be charged what is called a clawback. The reason a clawback mortgage is charged when breaking a cashback mortgage early is because the entire amount of the cashback will not have been repaid to the lender. So, for example, with a cashback of $15,000, if the mortgage is broken 3 years into the 5-year term, since the mortgage is broken 2 years early, the clawback would be $6,000. How the lender will calculate this is by dividing the cashback amount by the amount of the term and multiplying it by the years remaining in the term. This calculates how much of the cashback is still owed to the lender. $15,000 divided by 5 times 2 equals $6,000. In addition to the clawback, there would be the early breakage penalty and discharge fee, which would determine the full cost of breaking the mortgage. Well, I hope this helped you better understand cashback mortgages. If you have any questions, please leave them in the comments below or go to my website to contact me directly. Thank you again for watching.